I have a hard stop about 12 o'clock. I have some family and friends coming, so I think we can go ahead and start. Okay, so first step, if you haven't read the PowerPoint, I strongly suggest you read the PowerPoint and volume profile, as I will not cover the details of volume profile and the shapes in this session, but rather to help people kind of figure out how do you determine the levels and which ones do you use from the VPOC perspective and the POC perspective, right? And as you guys know, when we first joined, or when we first started kind of introducing you guys to this, it was basically that you can find, I'm able to find supply and demand with no candles, right? If right here, I don't have a single candle on my chart, but I'm able to find the resistance points and not be kind of biased towards where we're going to go. So for people that are, let's say on this call here, I would just start marking some levels here, and I'll put my supply and demand in these ranges, so you guys can at least see how well these work, and even without the candles, right? I mean, without cheating and knowing where the levels are. And what I usually do is I'll point these out, and these will be my demands or supplies, depending on where the price is. Right here, we don't know. So this right here, and then we know that here, if you guys look, we have a couple of supplies, right? We have 1, 2, 3 in the same area. So if I was going to mark this, this becomes a crucial level, for a move higher. So here, if we look, and I'm just trying to able to catch these bottom ones too. So this becomes your key supply. And then above, whenever you have this many POCs like these stuck together, it's going to be a brutal supply or demand if it's on the bottom. That's going to be acting as a huge resistance or a big support. So for instance here, you guys see that these two levels it's basically your 2x POC, and I usually mark that like this if I see it. So this is 2x POC, and at this point I don't know, because I don't have the candles to know if this is a virgin point of control. What the virgin means is that it hasn't been tested. So if the price left from here and it never came back, that means the price is virgin and it hasn't been retested. Looking at this, just the shape of this volume profile, it looks like that we came back here and retested it just based on the high and low of this session volume profile. So it's a little bit of cheating, but you learn the tricks as you get more familiar with it. So for instance, this one here, since I know the volume profile is telling me we're kind of right around here, I'll mark these as green. This would be my red. And then on the supply side, there's multiple ways to do this. And if you look at this level right here, these are just stacked right here. 417, really stacked. And below that, you have, multiple levels here, 490, whatever you want to call it, maybe 492. And you have the psychological 4100 that would play a role. So the way I usually do is, if you take the average of all of these, you could do that. Like 4130 is key. Here's this one here. So for me, I would put it at the psychological level of 4100, which is right here. And then when I draw my supply, I would try to catch as many as possible, because there's so many value area highs and lows in this area. So this would be kind of the levels that I'm looking at in terms of supply right here. And you see that there's a lot more supply going all the way to about 4200 here. So this box honestly could be as big as this one, but it's just too wide of a range. 130 points is you can be like Twitter. It's like, hey man, I got the level perfectly. They reject it in this cloud, which is 130 points. So the first level of supply would be somewhere around here that we would be looking for. So I would put it right here, and then you can always validate all of these using your VPVR. So if you don't know what that is, it's your visible range volume profile, and they'll kind of tell you, where the average POC is. And this right here, and if you guys can see now, it looks kind of perfect. It basically determines that it's right here at 4118, which we talked about earlier, just moments ago. That'll be a crucial level. And you see the shelf right here stops, which is at 4163. And then, you start after 4200, you have a little bit of skinny belly all the way to 4380. So you could use this side to help determine the supply and demand, like right here. Like there's a little bit of supply right here. And how do you know that? Well, take a look at the POCs right here. How many do you have here? So these POCs, over time, they created a shelf that's fairly decent size, right? So it's probably the fourth largest shelf that you see. So this POC kind of, you just come here and you would just, not that, you mark that and you would put it like right there off of this POC, or if you put it in between these, that would be the level that you look at. Does everybody follow so far? I know there's new people. I'm just trying to touch some points that might help their trading a little bit. So now that we identified these, right, and you see there's some levels in between. So when I look at, let's say we're intraday charting, right, we want to know levels for Monday, I would look at these levels, like for instance, this one here. I know this can be a bounce here, almost has a 2x POC. So for me, I'll put this as a 2x POC. And I know if you're able to probably break right here below 38.20s, that there's a high chance that you're going to go, 37.90s. Then you have a little bit of support, 37.76. And all of these, when you compare them, if they line up with the levels, the stronger the level is. So for instance, this level has 2 lined up, almost 3 lined up right here. So 37.90 will be fairly important level. And then this one here has perfect 2 lined up right here. 37.75. So if that breaks, then it becomes, clear that you're going to go down. And then finally, once you break this 37.50 here, there's a strong chance that you're going to go to 36.75. And then if you turn on your candles, let's just go to be a little bit cleaner. We'll turn this off right now. And here's the levels. We had no candles, to kind of look off, but here, I'll just extend these a little bit. And here, every one of them was kind of right on. So it hit here, rejected, came back for a retest. Now you're hitting this level here. If you're able to break that, there's a really, really high chance that you're probably going to go somewhere 39.50s. And then if you break that, you go to 4,000, which you can even see on the price action here. This becomes your level of the first resistance here. And just like that, you have your demand is where you want to buy, and you have your supply where you want to be taking profits or looking for shorts, depending on how strong the market is. Everybody, so far, so good?
Thank you, Jordan.
Okay. So that's how you determine the supply and demand. And then intraday, what I like to do, and I introduced you guys recently to this, is I like to look at the sell-off runs. Like sell-off runs means when the price started to kind of come down and the bullish cycle when it started going down. So for instance, for me to find the resistance of this move here, I need a move down that was bigger than this. I can't use this move now, for instance, here, not this. I can't use this move right here to know where the resistance is on the top because it doesn't cover it, and it's far away from the price action. But I could definitely use this move here to figure out where the sellers were heavy and where I can expect, a rejection here. So for instance, this is our value area high right here. Okay, let me just make it a tad bit bigger. This is our resistance right here at 3905. This is our value area high. And that's where the sellers, they did not agree on the price last time when we were selling off, and they said it's too much. And now we're coming back to revisit that point. And, maybe if we break below this level right here, what is it, 38.93, that, you get a little skinny belly all the way to this area, which that's where it bounced, 38.68. And then if you break that, then you get the POC right here at about 38.27, which matches our 2x POC. So the logic and all the conformance points that we want are lining up with the levels that we have. So it kind of gives you a little bit more confidence. And if you want to grab bigger levels, this is what I suggest you do. So first of all, you want to do monthly to date. So for instance, you would start July, whatever the first was of July that we had. July 1st is so you would do July 1st to current. You would grab a fixed profile. You would do weekly to date. and then you can do previous week as well, and then you have year to date, and then sometimes the best thing that you can do is quarterly. And another one that you can do if things are really, really excessive in terms of price action, you can find like March 20th or a bigger sell-off or buying and drag that one, from that point to the buying action and then to the selling action, so that way you know what's going on. So if you look at this, let me kind of switch to like weekly. So this is, where's our March 20th? So this should be, heavy buying here, right? So if I was to grab, let me move this here. If I was to grab from here to here, what would I be looking for? Meaning if I grab from here, from the bottom to here, what would I be looking for if I draw a profile here?
Where price might come back to.
Hold on.
Support.
The voice is really low. Say it again.
Where price might come
Man
back
zone?
to.
I would look where the buyers were showing up right here, so I know where they're going to show up again. So here, the buyers were heavy in this area, in the value area high, because it seems to be the second largest shelf. And when we came back to revisit it, what do you expect? You expect the buyers to defend this level. And what did they do? They defended it for as long as they could. I mean, they pushed it all the way from 41 to 4,600, which is a pretty decent push. But then we dipped below this level, which becomes almost like a easy short on a retest. And look what happened. We dipped below it, and what happened here?
Tested it and went right back down.
Yep, they pushed it right back down. So the first level, if you're shorting here, should have been somewhere around here that you get out, which was about, 39.64. And now this shelf right here from the bottom becomes your resistance, which is 38.86, and we're right below it. Well, we're now above it, but I think I'm on the Maonashi's. Yeah. So we are right above that right here. So if you're able to reclaim this level right here, which is, what is this, 39.64, you have room to go all the way to about 4,100, and I will call this value area high to be my target. So just using volume profile here, this is your green zone. You go heavy on calls here. You're able to break this level right here and close above it, which is 39.64. If you're able to, well, maybe a little bit less, right here, 39.61, you're able to break that, well, then you know we have space, clear space to about 439, literally with no, any choppiness right here. This would be the area that's free money. Then level, let's say you have some runners and you're like, hey man, I want to make some more money. Then you have 4,100. And if you guys recall, that matches to that 41.18 level that we mentioned earlier using just the other profiles and session volume profiles. And then above that, obviously you have this level here, which is 41.70. And then if you wanted to mark this shelf here, it would be 41.43. So now you pretty much marked your levels like very close intraday levels. Then you look why we bounced where we bounced, right? So if I mark this level here, it's right on. If I put it below it, it's perfect. When I look at support and resistance off of the shelves, if I'm trading, depends where the price is. So let's say if I'm trying to take this long and this shelf was there, well, this would be my first level of exit here, and I would want to mark that level from the bottom, even right here. I would try to mark it so I don't get kind of killed earlier. So if I'm buying it, let's say 3559, I want this shelf to be on the bottom as much as possible, right? So that I don't get surprised. Like even if you put it right here, it's not a bad thing to do. So that way you catch the move from here to here and you don't get a quick reversal once the supply is hit. You can keep some and then you just have your next level here, and then above. But does everybody understand how to use the volume as a kind of like a shield to protect yourself where it's take profits or not? If the price is above, right? If the price is above, like let's say here, and let's say you're short, let's say you got in short a break of this higher low right here. Well, you want to be taking profits where the gaps are. Like this would be a good gap to take profit, 41.16, and not take it below this shelf here, because there's buyers sitting here. You don't want them to wash you out, so that way you hit your stop loss. Does that make sense to everyone?
Sure does.
Okay. So now we basically triggered to see where the buyers were, like using this shelf.
Right.
If I want to see, go ahead. Somebody saying something? No?
Nope.
If I want to see where the sellers were on this heavy run here, all you have to do is literally grab this tool again, go from here, and I will go to the date, and I will look for these levels to see where the sellers are. And again, we have a shelf right here. You guys see it? And this is what shape profile?
Is that a
Okay, P shape, yep. So if you look at this, it's the P-shaped volume profile, and we're going down. So the best rejections are at the volume clusters, right? So if you're selling down, if you look here, this is a good range for rejection, and that's pretty much where we rejected so far. If I look at this right here and I draw it right here, this is where we rejected. If we are able to break this shelf here, it looks like there's no shelf until we kind of approach the 4100. And that's why I say once you're able to break this level here, 39.55 or so, you have a strong chance to go to about 41.50, even 4200. And that's just using volume profile, nothing else. And you can always add more confluence points. So for instance, we add this downtrend, or let's make sure it's right on. So if you look at this and we switch to daily, kind of lines up right here that we might hit that on 39.61. If you're able to break 39.61, then we know there's a strong chance that you're going to go to 4,000, 417, that 418 level here. And if you break 439, let's say you hit this level and you get out of your calls, then you're waiting for the 439 to be broken, and then you have a free run all the way to up to here, up to this line here, which should be 495, another 60 points that you could scoop up. So does this make sense to everyone on the call? If it doesn't, please ask questions, because that's kind of what I'm here for. No questions? That's good. It's a good sign. Okay. So now that we got ES, I think we actually got most of the levels here identified for it. So, let's see, 30 minutes. So your value area low is right here. This one is more relevant. Yeah. So any questions on ES, like just looking at it, charting from BP, and all you do is you literally can even just switch tickers here, and it's just going to repeat the whole same volume profile for you on other time frames. So here's your NQ, same run here that we had from here to here. I don't want to delete these. Maybe I should delete these. Okay, so we have a nice little channel. We have the value area low right here at 12.5. So if we continue that run, this will probably be the potential target, because this is from December 21 that we grabbed this POC. So this is our sell-off, and you could even extend this to be here when we start a distribution, so that way you don't trick yourself and look. So now you have a level where, you know, we can figure out what's going on. So here's your start of that shelf at 12.2, what was that, 12.213. And you can mark that shelf to be all the way up to here at 12.371. And then you have a lot of supply until you break this, which kind of matches to your previous lower high. You following that? And then from the run up, this is where your POC is, and that's where we seem to have rejected last time. So if you look at this, it kind of rejected perfectly on that. So if you knew we were in a downtrend and we were pulling back, and this POC, I don't know if it was developed at that time or not, but let's say if it was very close to it, this would have been an easy short right here at 12,877, and it would have been driving pretty nicely, and you know where the buyers were next time when you rejected. So you knew the buyers were right here, so you could have scaled out from there. You had the buyers right here, you could have scaled out there, and then you had buyers right here at 11.4, and you would have scaled out. This was their kind of like last chance right here to save them from dipping was the level right here. And we haven't touched this yet, and I think we probably will soon. So same concept, just different, ticker. You can apply the same logic over and over. Does it make sense? And then the best part is you can use this if you want to use it on 5 minutes, you want to use it on 10 minutes, whatever time frame you want to use it. For instance, let's say you want to use this for intraday charting and trading. So if you grab this run here, let me grab 10 minutes. So if you grab this run here, from here to here, you're able to know where the buyers will show up, where the sellers will show up. Usually, retest of volume area highs and lows are really, really good for shorting, and the POC retests are really, really good. So here's your POC of that run here. That's your POC, and that means the highest point of volume was traded in this area right here. And I'll probably mark it somewhere like around this. Then here's your value area high. So here's your spike up, and it came back for a retest. And if you go into 3 minute like trading, you'll see that this works pretty nicely here. So if you look here, you broke above the value area high, you came back for a retest, and you went higher. Boom. And this alone here is probably plenty for you to make, enough money for the day and walk away. And then here, obviously, we had a shelf that was created. And you can go into whatever is called replay or on demand on TV and look how it would work, so that way you kind of learn it. Here you can expect, if you dip below this, you can expect to short it anytime it comes back to it. So here, if you took a short, you would have hit a stop loss, and it's not going to work every time, 100% of the time. When you go above it and for a retest, you can take it long, and you could have taken that long for a nice low. What is this? 2157 to about 2190. That's pretty good. And here, it went below all of these levels and it hit this cluster, which is probably your last cluster here before POC. And it came back and they defended that pretty nicely here, and they drove it up. So if you just used, see this guy here. So if you saw this right here, you're basically accumulating at the level where we had a shelf for. And that's probably why the shelf was created, because of this action right here. You go above this low box and you come back and look. You drove it higher. If this one was your first level of profit, you could have taken your profit here. You had a skinny belly. Even if you took your profit here conservatively, remember, you want to be taking profit here, but your value area high is right there. So you take your profit at value area high. If it breaks above it, go again on the retest and keep driving it. Fairly simple, honestly. And you can do this on any chart that you can think about. Here's the cues. So the value area low was here. Here goes value area low. We broke the POC, which is a little bit different than the previous chart we looked at. The POCs are flipped. And here, we broke above the POC and drove much higher to the value area high, but it seems like we're not agreeing on the price on accumulating above the value area high. So if we are able to break below this level, 294.87, you could catch us quick scalp for $2 all the way to this level on Monday. So this would be a quick short, not, you know, small profits, quick short to 292.74 right here. And that's just dependent where we open or how we do on the futures. And here you have this low for the intraday. And there you go. So now you know you have a higher high, lower high. So if you're trading just a naked chart, you had this line here, you connected the two lower highs, and this was your retest. And if you went long here, you would know that your target is right here. Does everybody follow so far? Am I going too fast? So if you played lower high breaks and you use the trend line as your buy, you would have gotten in on this candle here. If you got in on this candle here, your first level would have been the POC, which is right here. So let's say you got in on the break here, or let's say you waited for this to be broken, which was 294.57. You would have been driving it all the way to 295.16, and you would have gotten there out. So that's probably about, what, 70 cents that you would have caught on Qs, which is pretty good at 2 o'clock.
Hey, Shorty.
Mm-hmm.
Yeah, isn't this is an intraday candle, right? So it's not gonna, your volume's not gonna look like that until the end of the day, isn't it?
Well, I mean, this is at 2 o'clock. This volume shelf, if you go back in time and you test it, the structure of this volume profile is not gonna, majority of your volume already happened on this run here. And I grabbed the volume shelf from here, remember? This is my volume shelf. I grabbed it from something that already occurred. If I grab it from here, this shelf is already there. This is already set. I'm looking to where the buyers are going to show up now. I'm looking, you made this run. Thank you for the run. Now I want to know, when you start dipping, where can I buy the retracements up?
Yeah, I understand. My bad. I was thinking we were going to the end of the time period.
No. I was just looking at this run. So for me, these are, points here. You can buy it on this POC. You can short it on this value area high. You can short it here, buy on a retest here. If it breaks up, buy it on the retest, which you had a little bit here. And on value area low, this was a nice shelf for you to go long.
Is that something that works out the first 30 minutes of the day? We maybe just go to...
Usually when the initial balance set is high, like for instance here, it was set, oh, no, not that. So this is your initial balance high right here for the day, and your initial balance low. So this was a typical day in the market, right? So this is your initial balance low and initial balance high. So usually when you see a run up and run down, that's when you can draw this, and let's say this reversed and this was a down. Just grab it the same way and use it for selling and shorting. Let me see if we can find. So let me look for one that triggered selling here, for instance. Here, let's see, this one.
Jordy, could you also do a retracement on that move to see if there's confluence with the...
Which one?
Based on volume profile.
Like fibs on this?
Yeah, basically like the same move that you just took the volume profile of. Could we also do fib retracements and see if there's confluence? Yeah.
There you go, 61.8.
Yeah, I just grabbed it and saw that the 61.8 was kind of perfect.
Yep. So it held here, and you can always do that. I mean, the fibs are, one of my favorite things to kind of use for retracements and pullbacks. And then here's your upper target. So this becomes your, once you break either side, you can go long or short. So let me find one where we sold off, and that's where you would look to short. For instance, let's look at this one here. So if we look at the one for shorting, let's say it's up to here to here. And this one honestly did not. So once you break, so if you're shorting here and you break the value area high of that action, definitely go long on it. So if you look here, there was a lot of selling here, and the POC happened to be here, and then the value area low was here. So if I was to short this, right, my first short entry would have been at the POC, no questions asked. Where did it go? Right there. So my first entry would have been the short right here at the POC, and that probably would have worked out, 278 to about 270. And you should know by now that this right here was your low volume cluster here that you probably should get out. Right, so if you shorted here, this would have been your first kind of get out entry. If you're able to break this, remember, you go above it, you can go along to the next level, which was your value area high here. And here, if you shorted a value area high, you would have hit the stop loss. And then moving a little bit, and I'm trying to get this level here, maybe somewhere around here. So if you look at this level here for the day, they created basically a cluster here once they broke the value area high, and there was a lot of buyers. So you broke above this on the selling, and then you basically initiated buying here. And I'm just looking at today's day, right, for trading. I usually, for intraday levels, look the day before as well. I will never just base it off of this run. For me, I would have definitely looked at this, whole session here of the volume. So it would be something like from here to here, so I know where I can expect a rejection or what's going on from the day before. So this was my POC. This is my value area high. So at the POC of the previous day, especially if you're hitting from the bottom, it's probably a good level to short. And that would have been the case in this. But just based on this run, for shorting, this probably would have washed you out, and you could have made one good trade here. Here you would have hit a stop loss, and then we flipped to the bullish side, and you hit the previous day POC. I always use previous day with the current day to trade on intraday. It doesn't make sense not to, because this is developing and this is already developed. So if you look at...
Are you always using real-time hours instead of extended for that?
Yeah. Even if you do extended here, you're not really going to get much in terms of volume. So for instance, if I grab it from here, let's say... So let's just mark this POC to see how much they shift. It shouldn't shift much. So if I change this, this is our with post hours, and I shift it now there. I mean, honestly, not much for me to I guess worry about it too much. So this is the regular trading hour. So I know this is the POC from the day before. I know, for instance, this is the value area high. And this is my value area high as well of the day prior. And then if you're doing trading and you're trying to figure out where this can go. So here you go. So this is my value area low from the day before, and look where we bounced from that. Perfect hit all the way. I mean, all the way went to this. It broke the value area high of the previous day. And I mean, if you're playing this, my first exit would be where? If I went long on here from the previous day, where should you get out?
POC.
Yeah. You should get out of the POC, and you should not really question it too much. And I'm talking about previous day POC. This would be your first exit. And if you're really, really, conservative and you don't want to take much risks, then if you're scalping, you had one level right here. So you would have played 50 cents here. you would have played, you know, something around here. You had a little bit of level right there. And then let's say you got out here. So these would be your levels that you're kind of after. Hey, you come back here, I'll buy long, get out, break this, go long, get out, and play the levels as you see them from the volume profiles. And this is just 2 days, guys. This is not much data, but for intraday, you can use this. And then if you added your, you know, what is the last week? So let's say from the 4th. Where's the 4th? Well, we would have been off, so. And if you add this piece here, now you get a full week of data, right, to know. So your value area low is here at 286 right now. And a perfect short happens to be kind of right below this level here. And I hate when I pick the wrong thing. So this would be short to, what is this level here? 287-ish, I almost say 287, which should be my value area. Call it 286.76. It would kind of go all the way to this level. And then in between, if you're risk averse, you'll have levels for trimming, right? You have some right there. You have some right there. Here. And then these would be the levels that you have. If you're an intraday trader, you do not want to have huge gaps between your levels. These would be the levels that you care about. And now if you just add a little bit of confluence points. So where else could you take place here? Let me just hide this guy. So let's see. So we know, how do you guys think? Remember that? Anyone?
Sorry, what was the question?
Where else could you take a short here?
On a break of the higher low trend line.
Higher low, this one here, or this one here?
On that trend line.
Yep, so you could definitely short here, which is a little bit more aggressive, and you have to be a little bit quicker with your profits. So let's say we break this tomorrow to, what is it, like 294, call it 5. If you break this, then you have about 293.95 to dip here, and this is where you can expect a bounce in this area. This is the area where you do not want to be in a trade when it's so close together like this. So if you break here, you're looking to get out right on this point. And if you see that it's breaking, then great. You just keep driving it to the bottom side here, and this will be the next trim that you have. And then if you see that we break, value area prior day high, then, and our key entry was here. This was our kind of what we were looking for. But if you can drive it all the way from here and trim and leave some runners, then you have a really good trade. Okay, and then you keep going, and you have the next range, which opens up the space a little bit more. And if you think about price action, this would be your higher low, and now we're contracting really, really here on the top. And I'm just going to remove all of this. So if you mark these levels, for instance, let's go on 5 minutes, right? So if you look at these levels, right? So this was your higher high here. Then you have your right here, and you guys see that you're obviously making lower highs. So until you break this level here, if you break 296, psychologically you're probably going to go to 300, and I'm sure we have a level there. Here, if you just look at these 5 minutes. One, if you wanted to wait and be patient on price action, this becomes your shorting level, and this becomes your potential bounce area right here as well. And you see that you have a little cluster of indecision candles right here. And if you extend that to the right, this would be your, if I go on VPVR, there's going to be some kind of shelf here in between. Yeah, there goes a little shelf right here on the last resort. So if you're going to short right here, like below this, you want to make sure you're getting out right around this area. And this is just naked trading. And if you short lower high, there's a high chance you're going to go to the previous high as well, but you see the support here. So that's why naked trading, sometimes you need help with the volume, and that's where you make a deadly combo. So if you short here, you definitely want to be getting out before the bottom of this, because they're going to defend this area right here where you see a shelf. They're going to be defending this area. So you short here, let's say 295. Well, all the way to 294.20, about 80 cents, you can make decent money on Qs. Okay, so here's my, my higher low. And this one will be really, really important. If we're able to break this one, this becomes clearly a short level all the way. You have a little bit of here, but I'm pretty certain that it would go all the way to about here. So once you break this, you're headed to this level here, 288, which I think that's what we had previously. All right, guys. Hopefully you learned something new, and I'll talk to you tonight.
Later, dude.
All right, bye, guys.